Hi, how you doing, guys? Great to see you all. Today we're going to cover retail industry. We already looked at softline part of it. Today we're going to cover hardline, similar to what we discussed last night at our club meeting. And today we're going to look at different company, even though it is in exactly the same industry, but it has very different product. Okay, first of all, I'd like to remind you that this seminar is educational, and despite we are going to analyze the company and we are going to look at some possible trading strategies, you have to make your own decision regarding investment. And before you do any trade, you have to fully understand that that's your full responsibility about your all actions. Please put plus that you understand that. So it's important that you do understand. Great. All right, guys. What we're going to cover today. So first of all, we're going to look at current market evaluation and what we can expect from it. Then we'll look at retail industry as a whole and try to see what pros and cons it has. Then we'll look deeply, analyze it fundamentally, like on example WSM, Williams-Sonoma, and we'll look at fundamental analysis and technical analysis. And we try to identify the kind of the perfect position to entry into this deal with this company, and then we'll look at different possible investing and trading strategies. Okay, and then if you have any questions, we're going to cover them as well. Okay, so firstly, Dow Jones Industrial Average. I'd like to remind you that industrial average Dow Jones includes 30 biggest companies by their capitalization, and it's kind of indicates the whole market, the movement of the whole market. So what we can see that in 2008 it was a fall, and after that time it's kind of steadily growing, except 2011 we can see was a slide here, and in 2014 to 2016 it kind of was flat. We can say it was horizontal and it was holding the level about 18,000, and then already it's broke, and after Donald Trump was elected as a president, we can see that it start moving up. But if we look at a long-term trend, we can see that it's approaching the long-term resistance. It's still in that trend. Here it was trying to test it and trying to get out and go to parallel trend or maybe a downtrend, but now we can see it's went back to the fast line of it, and at the moment we're approaching its resistance. Okay, you have to pay attention to that. So, and also if we look at indicators, we can see that all overcooked. So MACD is definitely above zero, but still climbing up. So it didn't turn around. Bars not becoming smaller yet. It's still going up. Also stochastic in the same way in RSI. So it doesn't show us at the moment that it's over bought situation and that people already start selling it off. So we don't see that yet, but based on our trend, we can expect that it will happen sooner or later. Probably sooner than later. Now that's that was a weekly chart. We can see each bar was 7 days, and at the moment I'm looking at daily chart, and also we can see that was the end of the flat period. And then it start moving up, and that's where the Donald Trump was elected as a president, and we can see that's now it's moving up. Okay, and it's closer to the resistance level. So if it bounces back, so and whatever goes up, usually it comes down. Okay, it never goes up, up, and up and up. Okay, even though a lot of business people and businesses as a whole, they took presidency of Donald Trump is a very positive sign, because they believe that if the person was a successful business person and he could run multiple businesses successfully, probably he will run like country as a business, and the country will become successful. So, and also because his mindset is business mindset, most likely he will help businesses to prosper, and he will introduce new policies, new procedures, which will help businesses to be more successful. At least what people expect from him, and that's why the market reacted this way. Interestingly enough, that a lot of companies, they don't show increase in their profits. And if we look at the last 1.5 years, we can see that a lot of companies, their earnings flat, or if they grow with a significant smaller like pace than before. And a lot of companies are actually showing like a reduction in their earnings. And despite that, the market climbing up. So you have to be careful, because if something happens right here, like politically, economically, so what can happen, that market can pull back pretty quickly. And if we see that at the moment it's 20.6, even though if it goes back to the same level, would say 18,000, it means that it has to go about what? Nearly 15% down. Okay, so, and if Dow Jones going down 15%, believe me, you will see a lot of companies, even though they're not included in this Dow Jones index, they will go down as well. And imagine that if you put $100,000 and you have $15,000 setback, it's not nice to have. So that's why you have to be really, really careful right now when you're choosing the companies for your portfolio, because it's easily can happen pullback. The best way to buy companies at support levels, so like here, like here, like here, that's like here. So in this particular case, you can grab best companies at the bar, like at the prices which are cheaper than normally. So if you have something in your portfolio, be really careful of entering the trade. And if you have a choice to choose conservative strategy, I'd rather go for conservative rather than aggressive strategy. We're going to look at 3 strategies: neutral, aggressive, and conservative today. Personally, I'd rather do something conservative now in order to protect my investments. Okay. Now, S&P 500 in a similar way, so I didn't show the long-term trend, but if you draw it yourself, so you will see similar situation. And also we can see that at the moment it's approaching the resistance line. So easily we can expect that it's going to go back to about 2,250 points. Okay, so, and also we can see that all indicators, they're in a overbought situation. So we can easily expect that it will drive the price of the index down. Okay, also, so it's like confirms the S&P 500. Now, if we look at Nasdaq, similar situation. The only small difference between Nasdaq and previous 2 indexes that it's actually broke through the resistance level. Okay, so technology companies, it looks like people like them now. Okay, they drive the whole market. A lot of talks about that, and people are happy to pay more. And look at this, it start moving up faster. Okay, also we can easily expect that it's 1 roll, 2nd roll, and at the moment we're in the top of the 3rd roll. So easily can pull back to about 5,250, 5,300. So easily to this level. Okay, and also, so if you invest company in a company which is included in that index, so you have to just pay attention to that. Okay, that's important part.